Taking a look at the interest rate market today, I want to focus on the two-year note. The two-year note, a big mover today. Now, we did see the middle of the curve move more so than the fringes. The 1s through 7s were where the big price movement was today. We saw a lot of action across all the different durations. But looking at that two-year note, boy, there was some price movement there today. We saw it settle right around the 107.18 level. Now, again, we saw a high of 107.25 and a low of 107.181. So settling just off the lows of the day, but quite a reversal from the last couple of days. And when you look at the two-year now selling off, it is interesting that the big force today was the shift in the narrative, the shift in the tone, the administration basically indicating that they are going to delay additional tariffs on China until December. When that broke this morning, we saw a big reaction in the equity markets, the bond markets, a lot of different asset classes, and certainly selling pressure in the bond market and buying pressure in the equity markets, where we saw some of the major averages, all of them up over 1%, and the NASDAQ up almost 2% for the day. So a big change in the tone in the market sentiment today led to this price movement that we saw in the two-year note. I want to also point out that looking at these yields now, the two-year settling right around the 1.66 level, and that's up from 1.56 just yesterday. So again, some significant price movement there, and we saw the yields bumping up, pushing back up towards that middle 1.6 level. And the real interesting dynamic here today, folks, was the fact that we saw the yield curve continue to compress. Now the two-year, 10-year yield curve is down to 1.5 basis points. So we did see some significant shifting of that yield curve once again today, trending lower. Not quite inverted it to this point, but getting closer and closer on a daily basis. And again, that has been historically a harbinger for a recessionary type environment. I think it's 5 out of 5 in predicting a recession of the last, I'm not sure what that duration is, but for the last 5 times that yield curve has inverted, we have seen the U.S. economic structure enter a recession, at least for a short-term period. So again, that's being priced into the market as well. It does seem now, with some of these dynamics with the trade war and some of the shifting dynamics within the yield structure, that the expectations continue to increase, that we are going to see some slowing in the U.S. economy in the next couple of quarters.